Hello there. Welcome back to Financial Accounting at 6. Uh, Today we want to look at a question that on November 2023, uh, question 4 on the cash flow statement. So we're going to start on 4.1. The question reads, the financial year ended on 28 February 2022. Calculate the following figures for the 2022 cash flow statement. 4.1 is income tax paid, 4.2 dividends paid, then 4.3 proceeds of shares issued, 4.4 fixed assets purchased. So we have got information that we have concerning those calculations. So if we go to the next page, you see that we've got information from balance sheet on 20 February 2022. We've got the 2022 column and then 2021 column. So very important to note the current year and previous year. So our current year is 2022, then our previous year is 2021. Then on the note part, fixed assets were sold at carrying value 490,000 and interim dividends of 420,000 were paid. Then we've got information from income statement on 20th February 2022. That was information B. Then we got information that we are given there. Then beneath this, we've got information C. We've got the share capital table that we are given, whereby we have in a column for share capital, number of shares and details of shares. So this is the information that we have. So we go back to see the first part of the question. So if you go back, you'd see that the first part is saying income tax paid. So I'm going to give you the tip in terms of how to prepare the SARS income tax account. So that's where we are going to find that income tax paid. Remember, the figure that we are looking for is the actual amount of tax that was paid, not the tax for the period, but the actual amount of tax paid. So this is a calculation on cash basis. So if you come here, I will just give you in the form of T account when you're preparing the SARS account. So this is, let's say this is our SARS account. So what happens here is, let's try to see, isn't it maybe? We have a SARS, we're supposed to open a SARS account. In this SARS account, remember on SARS account, we might have an amount payable to SARS or amount payable by SARS. So depending on the balance that we have at the beginning of the year, so we might have a balance that is under the current assets or under current liabilities at the beginning of the year, and also at the end of the year, we may have either of under current assets and current liabilities. So if we have at the beginning of the year, if it's under current liabilities, it means it's an accrual at the beginning, and it would be a credit balance. So let's just say the year accrual at the beginning of the year comes on the credit side of the SARS account, and this will be a credit balance, or it will be under current liabilities, So this is what we have. So finally, we can say it can be also under current liabilities. So this is our opening balance if it's an accrual. So if it's a prepayment, it's a payment in advance that maybe was made in last period. So in advance comes on the in advance at the beginning of the year comes on the debit side. So this is at the beginning, and it will be a debit balance, or it will be other current assets. So this is what we're depending on the question, how the information is given. Then the tax for the period comes on the credit side. This is the tax for the period, which is supposed to be charged to the income statements. Remember, after net profit, after we've calculated net profit after interest expense, we are supposed to subtract the tax amount. So tax for the period comes on the credit side. Remember, the double entry is we credit it in the SARS income tax account. So this SARS income tax account. So then a balance at the end now. When it's now an accrual at the end, it comes on the opposite side to be accrual at the end. And this one will be a balance that you're given in the end, and it's a credit balance, or it's under current liabilities. Then when it's a payment in advance or a prepayment at the end, it comes on the opposite again side there. We've got payment in advance here, or is a prepayment. it will be a debit balance at the end, or it will be under current assets. So this is what we have said. The amount that we are looking for will be supposed to be a balancing figure that we find here on the debit side that's supposed to go to the bank. So this is the amount that is supposed to be posted to the cash flow. Remember that we are looking for the actual cash, the cash that was paid for tax. So this will be on the debit side. So these are the figures that we are going to look for as we are calculating this tax that was paid. So if we come here, you'll see that the balances that we have, you can just refer back as we calculate it. We've got the balances that we are given on the next page. So if you go to the next page, you'll see that here we've got SARS income tax. Remember this is the previous year, so we are starting here. So our opening balance is 63,000, which is a debit balance. So we are just going to do as such. Remember, we said the debit balance. Let's open again that income SARS income tax account, which is our income tax account. Income tax account. We have got at the beginning we were 63,000, which is a debit balance, and we said it's supposed to come on the debit side, so it's 63,000 here. And then we also have our balance at the end, which is a credit balance. So it's a credit balance, which means the BD is on the credit side at the end, but the CD will be on the debit. So you're going to put it on the debit here, 18,000. So what it means now, it means we are now looking for the SARS amount that's supposed to be on the credit side. Remember, this one tax for the period is the one that we are looking for now. So if we go there, you'll see that. Let's try to see. Let's try to see what we have there. So this is the amount of tax for the period. So we are going to look for that amount, and then we put it on the credit side. So if you come here, you see that the amount of checks that you are given, we are giving it here, income tax 477,900. So we're just going to put it on the credit, 477,900. So we are saying it's here, 477,900. Then on the calculation now, the figure that we are looking for is here, supposed to be here, which is our bank supposed to be here. So we're going to find it as a balance figure. So to find it, we're going to say 477,900 minus 18,000 minus 63,000. So basically, we are saying 477,900. Then you subtract your 63,000. Then you subtract your 18,000. So this is the calculation for our tax. And then if you calculate it correctly, you're supposed to get 396,900. So this is the figure that we have in terms of our tax. Then we can go and look for the next question. So if you go to the next question, now we are on 4.2. It needs us to calculate dividends paid. So for this dividends paid, we need to open a shareholders for dividends account. So you also need where to place the figures. So we are saying shareholders for dividends account is the one that we are supposed to open. So this is the shareholders for dividends. So for shareholders for dividends, we are saying shareholders for dividends does not have a balance that is B on the table located. It's supposed to be on one side. So we are saying the open balance will be on the credit side. As simple as that. It doesn't appear on the debit. It's only on the credit side. So opening balance will be on the credit side. Then closing balance will be on the debit side. So this is what we have. Then the total dividends for the year will come on the credit side. Total dividends for the year come on the credit side. Then the amount that we'll be looking for, you find it on the debit side here as a balancing figure here. So this is what we have. Or alternatively, you can use the formula that you say opening balance. This is an alternative way, opening balance, then we add interim dividends. Then you get the dividends paid. Then the answer that you get will be dividends paid, and this is the figure that we'll be looking for, placing the cash flow statement. So depending on the question, but this is the simplest one. The second option is the more simpler one. So what we are going to do, we are going to look for opening balance, then we check if we have got interim dividends, then we add the two but some questions won't have the interim dividend. So maybe you are given only total dividend. So you have to employ the one of opening shareholders for dividends account. So I will go there to see what information do we have in the question. So if you come here, we are given, if you go to the list of balance that we are given there, we have got ordinary or shareholders for dividends is here at the bottom. We have got 195,000 as the opening balance. Then we add check for interim. Interim is given here. Interim dividends 420. So basically, we are just going to say 195 opening plus our interim, which is 420. Then you get your dividends paid for to be posted to the cash flow statement. So we are saying here, let's just say the figures that we have. We are saying these are 4.2. So we are saying 4.2 is saying we are saying interim. Oh, sorry, opening balance is 190. Let's try to see 195. Then we are adding the interim 420,000. So let's try to add those two, see what we get. Right. If we add the two, let's try to see what we get there. You'd see that the answer that you are getting is 650. Get 615,000. So this is the amount to be posted to the cash flow statement. This amount that is being asked by the question. Then you can move on to check at the next question. So we are here. Next question is saying proceeds of shares issued. Proceeds of shares issued. So we are saying the shares that were issued, how much did we receive in actual cash? This is the figure that we are looking for. But for you to find that figure, you need to prepare the ordinary share capital note. The ordinary share capital note. So if you come here, let's try to see what coding the information that we're given. So the information of ordinary share capital is given on information C. We're given on 1 March where we had 1,500,000 shares. The value is given in the list of balances. 300,000 were repurchased at $6.90 per share. And then we've got 40,000 shares with new issues that were issued. So the value of this 40,000 is the value that we are looking for, that we need to post to the cash flow statement as shares issued. Then at the end of the year, we had 1,240,000 shares issued. The value is given in the balances above. Then we can find this as a missing figure, the value of shares issued. So we are just going to prepare the ordinary share capital note. Then from there, you can just summarize the working on the answer section. So we are saying ordinary share capital note. So on the ordinary share capital note, remember we've got a section for the number of shares, and then the description comes on the at the bedroom, and then we have got the value of the shares at the end here. So what we are saying is at the beginning of the year, let's try to see the number of shares that we have. At the beginning of the year, that is on 1 March, with 1,500,000 shares. So basically we are saying 1,500,000. And these shares had an amount of 1,500,000 times 6.2. So we are going to multiply by 620 cents to get the total value. But this value again is given there in the list of balances. So if you go there, you can just take it from there in the list of balances. That is the opening balance of ordinary share capital that you are given, which is 9,300,000. So if you multiply the two, you are supposed to get that figure, 9,300,000. So here we are saying we have the value of 9,300,000. Then we move on to the next. Then we find that the next item is repurchase at $6.90 per share. But very important, let's take note when there's a repurchase and the number of shares that were repurchased with 300,000 shares that were repurchased. But we need to find the value of this share that were repurchased. Never use the value that you are given there is $6.90, because this $6.90 has got an extra amount that we are not concerned with in the ordinary share capital note. Remember, the price that is used to repurchase can be above the average share price. So when we are repurchasing, look for the average share price. So the average share price, we are saying the number of shares, we calculate it by saying total total value of the shares, total value of the shares before those shares were repurchased over number of shares before those shares were repurchased. So in this sense, the average share price that we have is going to be 6 Rand 20 because this is the average share price before this repurchase. If we had some shares that were issued after this, after the opening balance, we are supposed to get the total value, which is the value of the shares issued, new shares, plus the opening balance that we have, then we get total value. Then the denominator becomes the number of shares that were repurchased, 300,000 plus 1,500,000. So denominator will be 1,800,000. So basically that's what we have. So what we are going to do is, in this case, we are not going to calculate using this formula because we're only having the opening balance. So this 6 Rand 20 becomes our average share price. So this is the average share price that we use there on the repurchase. So we're going to say 300,000 times 6 Rand 20 to get the value of repurchase. So we are coming here, we are saying number of shares. Remember, we've got the column there, which is 300,000. And then the repurchase is, we're multiplying it again by 6 Rand 20. We don't use this one. This one is above the average share price. So if you multiply the two, let's try to see multiply the two, what we get. Right? If you multiply the two, you are going to get 490,000. Let's try to see. You're going to get 1,860,000. 1,860,000. So here we are saying 1,860,000. So this is the figure that we have. Then we now have new shares that were issued. That is 40,000. So we have got 40,000 shares that were issued. But for these shares, we are not told they were issued at how much, so we cannot find the value. So the value, you can only find it as a balancing figure. And remember, when we are repurchasing, we are supposed to, when we are repurchasing, we are supposed to show a negative value because we are repurchasing. So 300,000 that was repurchased should be in negative form. So here we're subtracting, and here we are subtracting also. So what we are saying is to find the value, the number of shares in issue at the end of the year. We are told there in the question that number of shares in issue is 1,240,000 at the end of the year. In issue, 1,240,000. So this is the figure that is supposed to come here. But this figure, you can also find it by saying 1,500,000 minus 300,000 plus 40,000. Then you get that figure that we have there, which is 1,240,000. So we are saying 1,240,000. Then here, the value of shares at the end now, we find it in the list of balances that we are having there. You see that the value of shares at the end, order share capital, is 7,724,000. So this is the figure that we are going to put as the value at the end, which is 7 million. Let's try to check 7,724,000. So we are saying here we have got 7,724,000. So this is what we have. So this is shares issued. Shares issued. You can find it as a balancing figure here. Then we are to find it as a balancing figure. Remember, we can just say, present it in a formula so that it becomes simple for us to get this figure. 7,724,000. We said 9,300,000. We subtracted 1,860,000, and then we added the shares issued, which we don't know, to get the 7,724,000. So basically, we can just make the shares issued subject to the formula there by saying shares issued is equal to, here we've got 7,724,000. And then we take the other figures the other side. This one is a positive figure, becomes a negative, minus 9,300,000. Then this one is a negative, becomes a positive, plus 1,860,000. And if you calculate correctly there, let's try to see if you calculate correctly. There, let's try to calculate there. You're going to get 284,000. So here we are saying 284,000 is the value of shares issued. So 284,000 is what we have. So we can try to check again in terms of the next question that we have in this question. If you go there on the first page, we have got the last part, which is fixed asset purchased. So on fixed asset purchased, also we are going to employ again another tier account, which means double entry is at pivot here. So we are saying we are going to open a fixed asset account, and when you open a fixed asset account, the balance at the beginning of the year, we put it on the debit side, balance beginning at the debit side at carrying value, then balance at the end or the credit side, at the end credit side, again at carrying value. Then this is again at carrying value. Then the disposal at carrying value, again disposal at carrying value comes on the credit side, and then the total depreciation for the year comes on the credit side. Then the figure that we'll be looking for is for the purchased figure. So fixed assets purchased, now we get it here as a balancing figure. So what we are saying is we are going to get it here as a balancing figure. So we're going to say this one plus this one, this disposal plus 10 plus balance at the end minus balance at the beginning. So basically we can say that we can go there and summarize that, look for the figures. So we are saying if you got here, we can check those balances there at the beginning of the question. We are saying we bring it here. We are saying here, this is our fixed asset account. This is a fixed asset account. Balance at the beginning, we said debit side at carrying value. Remember here, this fixed assets at carrying value. So at the beginning is 2021, we've got 10 million, 658,000. Then balance at the end, we've got 11 million. We put it on the debit side, 11,835,000. So we put it on the credit side, 8,835,100. Then we look for disposal at carrying value. Supposed to be on the credit side. Then we come here, we put fixed assets were sold at carrying value 490,000. So that's disposal at carrying value, which is 490,000. Come here 490,000. Then we look for the total depreciation. Remember, also should be on the credit side. Total depreciation for the year. Come here, you see that we've got depreciation that we are given here 408,000. This is the depreciation for the year. So we come here, put it on the credit side here. So we are saying 408,000. So depending on the figure that is missing, you can just use this T account and then find the missing figure. If the missing figure is total depreciation, you can find it there as a balancing figure. So the figure that we are looking for is fixed as purchased, which is supposed to be here. So to find this figure, we're going to say this one plus this one plus this one minus this one. So basically, we can present it in the form of a formula by saying, we now know that we are saying this one plus this one minus this one. So we are saying 11,835,100, and then we add 490,000, and then we add 408,000, and then we subtract the one on the debit side, 10,658,000. Then we calculate that one. The answer that you are supposed to get, let's check. You are supposed to get 2,075,100. So we are saying 2,075,100. So this is the figure for fixed assets purchased. So basically, we are saying this is representing here. This is representing our fixed assets purchased. Fixed assets purchased. So this is the figure that is going to the cash flow statement. So this is what we have guys in terms of this question of November 2023 for the pre-calculations that are supposed to be made before preparing the cash flow statement. So if you can subscribe, please subscribe and see we are still coming with more videos. As for this video, I'm saying.